All right, let's get right into it. If you've had your eye on Ethereum lately, you know it's been in a bit of a slump since the beginning of September. After a shaky August, the bears really took over, and the price has been sliding. So, the big question on everyone's mind is,
why is Ethereum falling? Is this just the usual market ups and downs, or is there something more going on under the hood? Well, we've been digging into the data, and it looks like it all boils down to three really key factors. Let's break them down.
First up, it's a classic story of supply and demand, economics 101. And right now for Ethereum, that balance is, well, it's totally out of whack. There's just way more ETH flooding the market than there are people willing to buy it. And get this, in just the last month alone, almost 76,500 new ETH tokens have been added to the supply. That's a lot. And to really understand why this is happening, we've got to talk about something called the burn rate.
So the burn rate is actually a really cool feature of Ethereum. See, every single time a transaction happens on the network, a little bit of ETH gets permanently destroyed. It gets burned. The whole point is to reduce supply over time. So the busier the network, the more ETH gets burned. But what happens when things quiet down? Well, that's exactly what we're seeing. Activity on the Ethereum network has dropped off, and fewer transactions mean a lower burn rate. So that ETH isn't getting removed from circulation. Instead, it's just piling up. And more supply with weak demand? Yep. That's a perfect recipe for a price drop.
Okay, so that's reason number one. But it's not just about what's happening on the network, it's also about who is selling. And right now, it looks like the big money is quietly heading for the exits. Just look at that number. This month alone, a jaw-dropping $389 million has flowed out of Ethereum-focused investment funds. And to put that into perspective, that is the single biggest monthly outflow we have seen since March. This is not a small change. This is a huge signal from the big institutional players.
You know, the link between this institutional money and the price is incredibly strong. When these huge funds pour money in, it shows confidence, it adds a ton of liquidity, and the price almost always goes up. But when they start pulling money out, like they are right now, it signals that they're hesitant, it drains liquidity, and the price tends to follow right behind.
And this has a massive ripple effect. Think about it. When regular individual investors see the big Wall Street-type players backing away, it makes them super nervous, right? That confidence vanishes, and suddenly, retail traders are way less likely to buy in, which just adds more fuel to the fire.
Which brings us to our third and final piece of this puzzle. So we've got supply going up, institutional money flowing out. But what about the everyday traders in the spot market? Well, the data shows they're getting pretty cold feet, too.
One of the best ways to see this is with an indicator called on-balance volume, or OBV. It's a pretty straightforward tool, but it's powerful. It basically just tracks whether buying pressure or selling pressure is winning. And for Ethereum, the OBV has been pointing down since the middle of September, which is a textbook sign of weakening demand.
So if you strip away all the technical jargon, what the OBV is telling us is really simple. Right now, there are more people selling ETH than buying it. Period. The sellers are calling the shots.
Okay, so we've laid out the why. You've got rising supply, big money leaving, and weak demand from traders. It's kind of the perfect storm for a price drop. But the real question is, what happens now? Where do we go from here? Well, based on everything we're seeing, there are two main paths ETH could take. So let's look at the two forks in the road. In the bear scenario, if this selling pressure keeps up and demand stays low, we could see ETH drop below that $4,000 mark and test support around $3,875. But, on the other hand, if sentiment flips and the bulls come charging back in, ETH could smash through resistance and make a run towards that $4,500 level.
You know, when it comes right down to it, it all boils down to this one question. Can the buyers find the strength to step in and soak up all this new supply, while at the same time fighting against the big money that's leaving? That really is the billion-dollar question right now.
And that leaves us with one final thing to think about. When you look at all this, the extra supply, the institutions backing away, the weak demand, do you see a flashing red warning sign of a bigger storm on the horizon? Or do you see this as a potential buying opportunity before the next big move up? How you answer that will probably define what's next for Ethereum.